Welcome back, Focus Learners. Today, we are taking a guided tour through a seriously critical part of your business toolkit, the Small Business Financials Workbook for corporations. If you're an incorporated owner-operator here in Canada, well, you already know that keeping records is just part of the gig. But today, we're taking it a step further. Okay, let's dive into this explainer and figure out how to actually read the story your numbers are telling you.
So here is our roadmap for today. We'll start by moving from entry to review, check out your GST/HST summary, decode your income and balance sheets, follow some audit trails and tax add-backs, turn those outputs into questions, and finally, define what good enough actually looks like. Just to reassure you, this is a very structured part of the maturity layer for your tax and financial discipline. We're going to take it step by step.
Section 1. From entry to review. Now, entering this section signals a really critical mindset shift for business owners who have successfully moved beyond basic tracking.
We're talking about the transition from simply logging data in your corporate expense tracker to actually reviewing the outputs to understand your business's reality. In the beginning, entering data simply answers the question, what happened? You know, you bought supplies or a client paid an invoice. But as your business matures, you really have to start reviewing your outputs. Why? Because outputs answer a much more valuable question. What does it mean?
So the crucial point is this. Entering information is absolutely not the finish line. Honestly, the workbook only becomes truly useful when you sit back and start reading the story those numbers are telling you. The whole system becomes infinitely more valuable when you actually use those numbers. Section 2. Checking your GST/HST summary. Let's move smoothly into the very first specific report we need to review together, ideally before that filing pressure starts building up.
Okay, your summary really boils down to 3 parts. First, the GST/HST you collected from your customers. Second, the tax you paid on eligible business expenses. In plain language, you'll often hear these called input tax credits, or ITCs. And finally, your net position. That's just what you collected minus what you paid, and it tells you exactly what you owe the government, or hey, what they owe you as a refund. But before we move on, it is absolutely vital to know your specific filing context. Are you using the regular method where you track the actual GST/HST paid for your ITCs, or are you on the quick method, remitting a fixed rate based on your revenue? Your outputs are going to look totally different depending on this, so always review your numbers through the lens of the filing method you are actually using.
All right, Section 3, Income and Balance Sheets. Let's transition over to the 2 primary reports that show exactly how the corporation is performing and where it currently stands.
Think of the income statement like a video recording of your business performance over a period of time. It lists your income, subtracts your expenses, and shows your net profit or loss. Basically, it just helps you see whether the business is actually profitable and if, your office coffee expense category has completely gotten out of hand.
Now, the balance sheet, or financial position, has to be read completely separately from the income statement. If the income statement is a video, the balance sheet is a photograph. It's a snapshot at one exact moment in time, showing exactly what the corporation owns, what it owes to others, and what equity has accumulated over time. It's all about your overall position, not just recent performance. And this brilliantly illustrates exactly which plain language indicators you should be checking to avoid any nasty cash flow surprises. Look at your cash. Check your receivables, who owes you, and your payables, who you owe. Keep an eye on that GST/HST position. And, super important for an owner-operator, check your due to shareholder balances. You've got to keep personal and corporate money clearly separated. Finally, just glance at the current year movement in your retained earnings.
Section 4. Audit Trails and Tax Add-backs. Here, we'll introduce the tools you'll use to trace totals and flag unusual items for proper treatment.
Let's walk through the income statement audit trail. If a total just seems off to you, there is a strict anti-goal here. Whatever you do, do not try to edit the final report itself. Nope, instead, trace it back. Start at the report total, track it to the specific category, find the source sheet it pulled from, and locate the original entry or adjustment. By following this path, you fix the root cause.
Alongside those audit trails, you're going to encounter tax add-backs. You see, some expenses need different tax treatment. Now, your goal here isn't to put on a green visor and act as the seasoned accountant to finalize this yourself. Your goal is simply to make these items highly visible so they aren't missed when it's time to file.
Section 5. Turning outputs into questions. Now we shift to the truly empowering part of our tour, how to use all these outputs to collaborate effectively with a professional.
Reviewing early means you can take your output and confidently ask your accountant, hey, Does this GST/HST net owing or refund position actually make sense based on my recent sales and expense activity? Finding a discrepancy now is going to save everyone a massive headache later.
Looking at your balance sheet lets you ask targeted questions about the money flowing between you and the corporation. You can ask, are the expenses I paid for personally on behalf of the corporation recorded properly? And does the due to shareholder balance look reasonable? This keeps the line between personal and corporate money crystal clear.
You can also ask things like, do these year-end accruals actually belong in this year? Or does the income statement cleanly tie back to the audit trail? These are incredibly smart, proactive questions. They catch errors early and make year-end handoffs so much smoother.
Let's move to and see how this builds. Section 6, what good enough looks like. This is where we define the practical finish line to really lower your anxiety.
We really want to relentlessly lower the pressure here. You don't need to be perfect. Good enough simply means you've hit these straightforward milestones. You know which report answers which question. You've reviewed your GST/HST before the filing deadline looms. You understand that your income statement shows performance and your balance sheet shows position. You can trace totals, you've flagged unusual items, and your questions for your accountant are perfectly clear. That's it.
To help you actually hit that good enough standard, Built to Thrive provides a really handy matching tool, the Owner-Operator Financial Review Sheet. It's built specifically to help you systematically review your profit, your expenses, your GST/HST position, and those vital balance sheet signals right before year-end approaches. Now, what's really interesting about this slide is the final empowering core message. The goal is not to become an accountant. Seriously, it's not. The goal is to understand just enough to review the corporation, notice problems earlier, and ask better questions. When you actually use your numbers, instead of just storing them away, you are taking true control of your business.
As a quick reminder, everything provided by Built to Thrive is for educational purposes only. We don't provide legal, tax, accounting, payroll, GST/HST, software, investment, financial planning, or filing advice. Always make sure to consult qualified professionals regarding your specific business situation.
So, focused learners, we've covered a ton of ground today. You've moved from entry to review, you understand your statements, and you know how to trace those trails. I'm going to leave you with this provocative thought. Now that you actually know how to read the story your financial workbook is telling, what is the very first question you are going to ask your accountant at your next meeting? Think about it, write it down, and start using your numbers today.